So you don't have to own the land for that entire 15, 16-year period to use the deduction. You can only own it, 2 years, making sure that you don't violate the charitable intent rule of the IRS. If you do that, or you put yourself in a position where they could say you did, you could bring yourself under scrutiny.
Where would I start?
First, have to buy the land, and then kind of come up with a timeline for yourself would be my suggestion. So if you're doing it where you want to have a land investment, but part of that investment process is also wanting to have a conservation easement involved, not only for the tax shelter, but to just to benefit the world out there.
Does the zoning play any factor in the land conservation easements?
Have to be zoned exactly right, but you might have to be able to prove that it could have had a variance done, that others, that apartment site example, even if you're zoned R1, but there's an apartment complex abutting the property, it's obvious that that could have been a viable site for that.
Hi, everybody. Jose Luis Morales here. Welcome back to another episode of the Residual Real Estate Agent Show. Today, we've got a very special guest. His name is Clint Flowers. He works for National Land Realty, one of the top land companies in the country. Just to give you an idea in terms of how big they are, last year they sold $1.6 billion worth of land. You're right, billion with a B. Today, Clint is going to be educating us on the land conservation easements. What are they? What are the tax benefits of land conservation easements? And he's going to explain to us also good and bad ways to structure land conservation easements. Welcome to the show, Clint. How are you?
Good. Thanks for having me.
So on the behind the cameras, you were telling me how you've been the number one agent at the company for the last 7-8 years in a row. Obviously, I know that takes a lot of hard work. Do you mind just telling our audience who is Clint Flowers and how did you get involved in land and the real estate industry as well, too?
So I've been doing this about 19 years. I grew up the son of a forester and didn't have any intention of doing this, and just kind of found my way back to it over the years. And after college, and built a website, had a few listings, had a couple sales, and just got hooked. Was independent for 13 years, and then merged my company in with National Land in 2015, and we've been off to the races ever since.
And for our viewers that don't know what a land conservation easement, what is a land conservation easement? And maybe just briefly, what are some of the tax benefits associated with land conservation easements?
The way that I explain it to most people, and I'm also on the board of a large land trust, and we manage easements, hundreds of thousands of acres in Alabama, but we work with land trusts across the country, is they're basically a deed restriction. They act just like covenants would in your neighborhood, things like that. You donate certain rights as a landowner to do certain things, and in exchange for that, you're compensated through a tax deduction through what they call a donation value. For example, the most common ones are no subdivisions, no surface mining, no arbitrarily clear-cutting timber, things like that are going to obviously interfere with the land's value to the world, whether that be protecting views, protecting water quality, air quality, certain types of wildlife, things like that.
Okay, so it's basically you're giving up certain potential things that you can do with the land in exchange for a tax benefit, basically. Does this go to any existing landowners, or is it only for people that buy land? And how long have these things been around? And what are some of the, like, how much can someone factor in terms of tax incentives also for it? Like rules of thumb, maybe.
So they've been around for plus or minus 2 decades now, maybe longer, but they came into vogue about 10 or 12 years ago. They used to sunset every year, so that to jump back, they would go a 5-year term for the deduction to be used, and then it went to 15, and then that sunsetted every year. They had to reset it. Finally, they made it permanent. So there's a couple ways to do this. I'll try to make the examples as easy as possible. First and foremost, what you pay for the property has nothing to do with what the conservation easement is worth, unless you do them in the first year. And then your ceiling for the deduction is that total purchase price. So between that and zero. So you can't deduct more than you paid for it. After year one, there is no limit. And I'll add into all of this, double check everything I'm saying with your accountant or your tax attorney, because I'm not one. But I do have a lot of experience with these, and I do them myself and as part of a charitable position on this board. So beyond that, let's say you've got a tract that's prime for development or mining or oil, anything you could think of that you own the rights to, and it's going to generate $10 million in profit. But when you donate the right to do that activity, you lose, quote unquote lose. You donate the right to do that, then you have lost $10 million. And so that is what's called your donation value. So that is the tax deduction that comes from that easement. Now, that can be a combination of things, whether it's, division, timber, mining, all those things together. Now, obviously, you can't stack all of those on the same acre all the time because you're not going to develop something you strip mined. But some of those things do run parallel, like timber, because you can go into what's called a working forest easement, where they still let you cut timber and manage timber. You just can't go in there and arbitrarily wipe the place clean. It has to be upheld to a management plan that is designed by a forester for you. But again, everybody always wants to know about the dollars. So on that $10 million example, you've got a $10 million donation, a tax deduction to use for up to 16 years. You've got the year of the donation plus 15 years. You can use up to 50% of your adjusted gross income of that amount every year. So if 50% of your AGI is $1 million, then you've got $1 million deduction to use. So that, my understanding of the 50% rule is that's, kind of the way that the IRS doesn't allow you to just write off all your taxes through this. Now, if you are a operator on the land, like you're a farmer and this is your farm, then you can have 100% of your AGI every year. But if you're just a land investor or an owner and you're not actively farming it, then you're going to be subject to that 50% rule. So the actual tax credit, the cash value of the deduction will be depend on your tax rate. So usually if you're in a 37% top federal bracket on $10 million and you're going to stay there throughout that 15 years, that has a cash value of about $3.7 million. Okay. Now, if you've got a tax, if your state has an income tax, that amount will go on top of that, as well as the Affordable Care Act surtax. It's 3.8%. So like in Alabama, federal plus state plus that surtax gives you up to a 45.8 cents on the dollar tax credit of that $10 million. So if you only paid, $3 million for the land and it generates $4.85 million tax credit, you've made a profit. You still own the land and you've got a tax deduction that you can carry forward for up to 15 years.
Now, what is the process like? Like, meaning, like, let's say I identify a piece of land. How do I know what the potential donation value is? And is that something that I know before I buy it, or is that something that's done after I close on it? Yeah, and once I donate those certain rights, is that forever, or do they expire after a certain amount of time? Like, meaning, like, if I donate those rights, do those rights ever come back to the new owner or to myself?
No, they're all in perpetuity. So they run with the property. Now, if you do happen to sell the property before you've used up the deduction, you carry the deduction with you, but the restrictions stay with the land. So you don't have to own the land for that entire 15, 16-year period to use the deduction. You can only own it, 2 years. And if something happens, you either want to sell, or let's say you weren't planning to sell, what have you, then you're able to do that and take the deduction with you. Also, from an estate planning approach, this devalues the land as it's technically encumbered. That doesn't mean there's always a market-driven depreciation as far as what somebody will pay for it, but from an appraisal standpoint, it is depreciated because of that encumbrance of the easement. So it can help bring your estate back into check to get it under whatever the applicable umbrella is at that time. So a lot of people use them that way as well. Or if they want to make sure that their family's going to keep farming it and never develop the land, they'll put that in the easement. So it has to remain farmland, and it can only be divided X amount of times, let's say one for each of their children, et cetera, et cetera. That's another way people use it. It's not just about the tax savings. Process wise, if you start Googling conservation easements, you can get very confused and scared very quickly. There's some, quote unquote, right ways to do it. And there's some quote, not right or not incorrect way to do it that's a little bit more aggressive. That, at the end of the day, it still ends up with an ease to protect a piece of property. So people have different opinions on that. But the key to all of this is making sure that you don't violate the charitable intent rule of the IRS. If you do that, or you put yourself in a position where they could say you did, you could bring yourself under scrutiny. When you hear about syndicated easements, that's why they're targeted so heavily, because you have groups that come in and buy the land either as a fee transaction, or they'll create a company, leave the landowner in there for a few percentage points, bring in investors, and bypass the 1 year and a day rule that I mentioned earlier, so they can immediately get that bypass that ceiling of the purchase price for the deduction. And for years that went on without a lot of oversight. But they had some rule changes where now if you do a syndicated easement, you actually have to file notice that you're doing that. So you are guaranteed to come under review, right now. I mean, it's not 100%, but it's over 99%. And some of those don't always get rejected, but they do get corrected. So, on that $10 million example, they may say, no, after this research, it's worth $5 million. And you got an investor that bought in to get the certain X deduction that now has that reduced by half. And on top of that, they may have gotten into a situation where they're going to get audited because they're associated with that syndicated easement. So you just have to be careful. If you're a normal person, a normal landowner, and you're going to do this for yourself, or even a group of you, and you're going to actually buy the land and hold it for a year and a day and do it the right way, I've not seen any situations where you really have anything to worry about, as long as you're dealing with a good land trust with good appraisers that don't push the envelope too far on the appraisals. Because that's the way that anybody can get in trouble. That's why the syndicated ones were targeted to begin with, because they were having these extreme jumps in value through the appraisal, within a month. So they buy it for $2,000 an acre over here. A few months later, the donation value is worth $15,000 an acre. So how did it go from $2,000 an acre day one, and 90 days or 180 days later, suddenly it's worth $15,000 an acre? So that's what brought them under the spotlight to begin with. So if you're going to do this, you just want to make sure you're dealing with a reputable group. And the process that you mentioned earlier, you asked about with appraisals, you can do some, inspections in the front end during your due diligence period. Make sure that it's got the features that you want to help ascertain if it'll qualify for an easement. But you have to be careful about making the business decision solely on that ability. Because again, if it violates that charitable intent rule, or ever, makes it appears to be that way, you could get yourself in trouble.
What is the charitable intent rule, just so our viewers understand that?
All of my definitions are layman definitions, so you can, again, Google this and get the true IRS code. But it's like anything when you donate to a charity. These land trusts are 501c3s. So like I'm on the board, but it's a non-paid position. It's a charitable position. They're all nonprofits. Their sole reason for existing is to manage and oversee easements into perpetuity to make sure that that people do what they're supposed to do. When you donate cash to any charitable event or entity, every year that you write off your taxes, those all have a charitable intent. If you were donating money in exchange for something, from one of those entities, like a position on a committee or board, or paying them to send you business and a referral, something like that. At first appearance, that looks like charitable intent, but when you really dig into it, it's not charitably intended. It was done for business purposes. So that's similar to how the IRS looks at that being violated. That you donated an easement, and you're getting a deduction for it, but you're doing this as a business deal, not to donate to a charity for the benefit of the world. You're only doing this
to save money on taxes, basically.
And there's nothing wrong with wanting to save on taxes. It's just, again, being focused on having that balance and not, putting yourself in a position where you come under scrutiny.
And that's the thing about the conservation easements that I've heard when I first talked to you, I've heard good things and bad things about them, but I didn't know there was that distinction between the syndicated easements versus like almost like an individual doing it on an individual basis. So let's say that I wanted to do a land conservation easement. Where would I start?
You first have to buy the land, and then, kind of come up with a timeline for yourself would be my suggestion. So if you're doing it where you want to have a land investment, but part of that investment process is also wanting to have a conservation easement involved, not only for the tax shelter, but to, just to benefit the world out there, in whatever format that is. Because in different parts of the country, easements have more common approaches, like in areas with a lot of vistas and beautiful views, they have easements based on that, where they restrict against billboard advertising and lights and things like that. Where we are in the Southeast, we do a lot of work in forest easements, where it's more about protecting habitat and water quality and air quality. So find the land, make sure it'll work for what you want. If you can hire an appraiser that's familiar with these, and just to kind of review it for you, or a wildlife biologist that's involved with doing these easements, because part of this process is what's called a baseline document that identifies what the benefit of this easement is for the world. I'm protecting, certain types of wildlife habitat, again, water quality, air quality, views, things like that. Make sure that it works, and on top of your normal due diligence to make sure that it's going to work as a farm or a timber investment, or whatever the case may be. And then my advice would be, even if you do it in a group setting, if everybody's of like mind, just do it the way it was intended, which is hold it for a year and a day at least, and then record the easement. And then you've got it. You can elect the benefit of doing an easement. And then over time, just make a decision on whether you want to keep that land investment or sell it. At which point you can take the rest of that deduction with you.
And then are there certain pieces of land that would make better for land conservation easements? Or is there something I should be looking for if I'm unfamiliar with land? Or is the best thing to do kind of work with somebody that is familiar with those, because they'll be able to identify certain things? And also, like, what if I wanted to use it as a combination of like a house, like a ranch, but also like for tax benefits as well too? Or there are certain combinations that you can use as well too?
Yep. So you could definitely hire a professional to help you with that, on the determining the better sites. But a lot of it's pretty common sense, where if you're buying a piece of property on a lake or a river or a mountaintop or near, wetlands or protected habitats, or sensitive habitats around the, coastal areas that are being developed around it, things like that, those are obvious slam dunks for the most part. And then in terms of doing what you want to do on it, every easement typically carries one or more what we call headquarter sites. And they're basically building envelopes that you locate on the property inside the easement, where you can do whatever you want to. Build one house, 10 houses, what have you. And then if you design divisions inside the easement, each division typically has its headquarter site. And historically, they used to let those float around, meaning they didn't have to define exactly where they would be on the property. You would just do that before you started building something. Recently, in recent years, the IRS has really advised that you go ahead and lock those in up front. And, most of the time they're pretty obvious where you're going to do it anyway. You're going to do it out front, close to a road, close to utilities, or close to that feature or that view that you'd want. So you set it up that way, and then within that, you can do whatever you'd like.
Does the zoning play any factor in the land conservation easements? Because I've heard, like, for example, in Collective Genius, the mastermind that we're both a part of, there was people that got variances on certain zoning to like maybe do like a self-storage. Is part of that due diligence or part of the appraisal process have the property has to be zoned for whatever it is that you want to receive the donation value for? Like, meaning if you're going to receive a donation value for timber, then obviously the zoning has to match that. If you're going to receive a donation value for developing into apartments, then it has to be zoned for apartment. Or do you have to go through the variance process if it's not zoned for that? And is that too risky if you don't get the actual variance, or does that play any factor into it at all?
It does. So it needs to be what you're donating and being compensated for has to be a feasible event. That doesn't always, in my experience, have to be zoned exactly right, but you might have to be able to prove that it could have had a variance done that others, in that apartment site example, even if you're zoned R1, but there's an apartment complex abutting the property, it's obvious that that could have been a viable site for that. Likewise, if somebody's got a plat where it's developing waterfront lots through, really heavy grade wetlands, that's not feasible. So they really couldn't have sold those to begin with. So they're going to get hit, if they do it come under review. Mining, if you're saying you're going to mine gravel out of a place that's so remote that you have no market for that gravel, then yeah, you could have mined it, but there's nobody to sell it to. So it's not worth what you said it was worth. Therefore, they're going to correct your deduction. The downside of those corrections is the restrictions stay. The deduction is what's changed. Now it can be nullified. They rarely are nullified, but they most of the time they just go through a 40-50% correction. But the important part of that is dealing with a reputable land trust that has a good team around them. The appraisers and things don't typically work for the land trust, but they do have a team of people that they have a history with and they recommend. The team that's part of that process is the land trust itself. You're going to have a wildlife biologist. You're going to have appraisers involved. There's going to be a legal team that handles all the title work and things like that. Typically, some survey work is going to happen. And then what can tag on to the end of that is, depending on what approach you're taking. So let's say you're doing mining, then you're going to have a geologist come in and evaluate the site, give his report, somebody that can run a pro forma on that, those kind of things. So a big question I get a lot of times is how much does it cost to establish an easement? And, the low end of what I see is about 25,000. The high end I've seen is about 75,000, depending on who all is involved, how complicated is it, how many professionals are going to be involved. That's the general range.
So, with that being the cost, is there a certain number of dollar amount that it wouldn't make sense to buy the land? So, for example, like when I hear land conservation easements, there's rural areas in Southern California that aren't very high end, but you can get land for really inexpensive. At the same time, just because you can get it inexpensive, that doesn't mean that once you factor everything in, that it'll make sense. Is there like certain like a rule of thumb as to, hey, if you're going to buy a piece of land, you probably shouldn't buy under $1 million, because once you factor in all the costs and everything associated with it, then it wouldn't pencil out. The meaning the cost would exceed any sort of benefit that you're receiving from it.
Yeah, and again, that what you just explained is pretty much how you do it. You just run it out the same way you would any other business plan. And, is this going to work out financially? And then also, am I doing this, for the charitable reason to benefit that for the world? But also, I don't want to do that and lose money at the same time. So you pencil it out that way. And if it doesn't work, typically that means you just go find a bigger site so that the expenses and the benefits spread out across a larger number of acres.
And is there a certain dollar amount where it wouldn't make sense to kind of do it underneath, or is that just case by case?
Well, the shortest answer would be that your tax benefit didn't exceed the cost of establishing the easement. That would be the easiest.
Way of doing it.
Yeah, just not if the easement is going to cost me 50 grand and the credit of the tax deduction is going to be 50 grand, then all this effort was for nothing from a conservation standpoint. From a monetary standpoint, And then the only real benefit then is just the donation to the land trust and the benefit to the world of easing that property.
Yeah. What about land trust? So you've mentioned the word land trust a couple times. I don't really know what that is 100%. And what is the role of a land trust? And is that specifically for land conservation easements, or do land trust have other roles aside from land conservation easements?
No, there's different types of land trusts, but every easement is held by a land trust. So not all land trusts hold easements, but all easements are held by a land trust. And a lot of times people don't understand that certain types of, or all types of mitigation banks have an underlying conservation easement in them as well. And on top of that is the bank. So if you're working with developers who have to buy credits to disturb, destroy, or convert wetlands on a development site, they're buying credits from a bank that has a conservation easement under it. So a lot of times people are already dealing around or with them, but they don't understand that yet. And that can be another approach, for using easements here, is if you've got somebody that wants to start a mitigation bank, whether it be for tortoises or wetlands or streamside mitigation, they can do that too if they have a viable site. But as far as the types of land trusts that hold easements, they're all over the country. I mean, many times your favorite college may have one. So they help, manage easements for donors or alumni or what have you. Things like Ducks Unlimited and the National Wild Turkey Federation all have their own land trust. You just have to pick which one you like and whose mission you agree with, and then also one that will be accepting of the easement type that you're going to have. So, like if you're, as an example, if you're wanting to do a working forest easement and the land trust that you've got your eye on doesn't accept those or doesn't want any type of working forest easement, they only want full restrictions against any forestry activity, then that's not going to be the one for you. But if you go, find one that's based in that, around that industry, they know that, to get the ease properties that they want, they're going to have to cooperate with landowners. And so you want to find one that's friendly to that. There's a group called the Land Trust Alliance that is a really good source for people to locate and learn about different land trusts and what all is involved in an easement. They also offer accreditation programs for certain land trusts that meet guidelines. So if you're looking, you want to make sure that you're dealing with a grade A land trust. Finding somebody with that accreditation is also a good move as well.
And does this work for, like, in my area, there's like let's say it's a oceanfront lot, and let's say an oceanfront lot, you can pick it up for like 200,000. And let's say that once you develop it, you can build like a custom single family home for like 1.5 million or something like that. Would someone be able to structure something like that, like to protect protect some of the sand life, or I wouldn't even know how to describe it.
No, we've had a little bit around here for that, is beach mouse habitat. And, we've had other ones are red cockaded woodpecker habitat, certain bats, all kind of stuff. So the answer is maybe. First and foremost, if you own that kind of site and you want to know, have it evaluated in terms of the feasibility for an easement. And that's going to be more of the biologist approach to make sure that, hey, is this viable habitat if we protect it? Because that's going to be part of this baseline document in your there's certain parts, chapters, so to speak, in your easement, and that's one of them. And if you don't have that one, then everything else is wasted, because it has to have a benefit of being protected, that benefit being to the world. So and the next step is, from a financial standpoint, is this going to pencil out? So what I advise people to do is, if you're already dealing with a land trust, they're evaluating it for you, go ahead and talk to them about, getting some comp. We, as real estate agents, we talk about comp sales a lot. So ask them for comp donation values. Are there a lot of easements around you for similar habitat? What did they bring per acre or per size? Is there an area that's more sought out? Things like that. And if it pencils out where, again, you're not losing money to do the easement, then yeah, it makes sense. But a lot of this just depends on your, not only what you own currently, but your long-term plan, because you're locking in that current use forever. So, in your example, if the market ever changed to where that needed to be duplexes or apartments or whatever, they can't. So they've got to take all that tax benefit now for any future gain. So they just want to make sure that fits their long-term profile and goals as well. And if it doesn't, go find another site.
Can you give us an example of maybe somebody who bought a land conservation easement, um, received the tax benefits, then ended up selling the property for, like if they sold it for less than what they bought it for? Can you maybe give us an example of something like that? Just full circle if somebody didn't want to hold on to the property?
So there's nothing wrong with selling it for less than you paid for it if you put an easement on it at a high enough amount, because it offsets. Again, we're talking about the math of this, financial math of this, not the charitable side of this. So in my world, what we're typically looking for is a current use of a certain type, which is going to be hunting land, farmland, timberland, something that already is priced as such that has a lower price per acre, so that we have more of a spread after a year and a day. If the uses there are viable, like mining, developing, things like that, because in these rural areas along rivers and lakes and things like that, you can cut up into these smaller estate-sized lots and sell them for 25 to 100,000 a piece on land that you paid 2,000 or 3,000 an acre piece. Now you get into the county I live in is the 6th fastest growing MSA in the country. You go to the south part of the county by the beach, that land's $100,000 an acre. Well, you can still make a sizable return on that, but you are paying that elevated price for its possible development use, and you're locking it in to being a sand dune forever, or whatever the case may be. So now when you go to sell it, you get to sell it as a sand dune with a house site on it, one house site, not a development site. So whatever that headquarters site allows, that's all that can be done on that property forever. So obviously you're not going to get $100,000 an acre, which is what you paid for it. So as long as the deduction and the cost of establishing the easement nets you out, and combined with the sale of the property nets you out more than $100,000 per acre, that's fine. You came out ahead. So does that math make sense?
It does. I'm just trying to figure out, like, there are people who probably help with this math, I would imagine, right?
Yeah, more times than not, it's me, because and I'd be happy to help anybody here who needs it, because the land trust can get a little nervous about talking about it because they're scared they're going to, put you in a position where you're violating your charitable intent, which is understandable. They don't want to, they don't want to put you in that position. But the financial side of this is important to people as well, because they want to be charitable, but they don't want to be charitable to the point of it negatively affecting their life. So understanding that is important. So there are appraisers who are certified to do conservation easement appraisals. You can talk to them, maybe hire them on a consulting level. There are different phases of the appraisal process, so many times they can give you a pretty good broad range of, using normal easements and their structures around here. The donation value will be worth A and B, and the more restrictive you make it, the more rights you throw in, the more net dollars it's going to kick back out to you. But at the end of the day, you are the architect of the easement. You only donate what you agree to donate. So what it's ultimately worth is up to you.
Anything else that you think that would add value for our audience that maybe they should know as it relates to land conservation easements or any of the tax benefits?
It will adjust each year with your AGI. So if you know that you've got a big windfall coming, maybe you can't use a lot of it this year, but you're either going to be getting a big bump in salary, income, or selling a business, something like that. Or you're going to have a big estate event where your family's going to get hit with a lot of estate taxes. They're a great tool to go ahead and get in your wheelhouse and have them planned. But they are, dollar for dollar, one of the best tax deductions out there.
I feel like a lot of people have been using the bonus depreciation with multi-units, with self-storage, mobile home parks, but that's going to start to decrease, meaning it's no longer going to be 100% bonus depreciation. And I feel like once that happens, people are going to be looking for other methods as well too, to maybe be charitable, but also have it make sense financially. And that's one of the reasons why I was so curious about it now, because I know that the bonus depreciation is running out this year. Do you, for bonus depreciation, you have to be what's called a real estate professional to be able to to have it to offset your or your income. Like if you're a doctor, you have to spend a certain amount of hours in real estate, and yeah, you have to spend a certain amount of hours. Are there any restrictions? Like if I'm a doctor and I do a land conservation easement, are there any restrictions of how involved I have to be with the property or the process? Because that would make it where somebody who's a doctor who maybe doesn't qualify for the bonus depreciation can qualify for something like a land conservation easement.
No, they can participate in full. The only part that they can't do is that 100% I mentioned earlier. Like if they're not the active farmer that owns it, that's actively farming the farm, they don't get the 100%. But otherwise, they get everything I've mentioned, which is the normal approach, is the 50% annual use limit. But they get the full 100% of the deduction. So they, again, anything not used in year one carries on and carries on until you use it all up. And you've got, again, 16 years to do it, the year of the donation plus 15 years following. So no, there's no limit for them. The only thing that would, comes to mind for that is if they tried to build some kind of compensation for them in the pro forma of whatever they were going to do that they didn't do, like development or, a mine or something like that, where they started trying to add themselves in as some kind of expense. But, most of them are smarter than to do that, because it just, it sets up some booby traps for you if you try to push the envelope. So my biggest word of advice to everybody on how to use these and use these properly is just, be reasonable, be conservative, don't let anybody involved push the envelope too far for you and get you in trouble.
Here's my last question for you. Do people typically finance the land ever? And is there a benefit to financing the land? Because like I know for like people buy cars sometimes, like a G-Wagon, they'll put $10,000 down, yet they receive $100,000 of bonus depreciation or whatever, 200,000 of bonus depreciation on year one. So the benefits exceed that. Do people typically finance the land when they're doing land conservation easements, or do they typically pay in cash? And is there a benefit to doing it one way versus the other?
The only difference, short answer is yes. Most of the tracks that we sell are financed. We actually have a financing arm called Landline Lending, and then we deal with other ag credit banks across the country. The only difference is between when you finance a tract, buy it, and then put an easement on it, is the bank has to subrogate their loan to the easement. So if the restrictions that you donate affect the LTV enough that they have to call a payment in to fix that, to get the LTV back in line, that is one thing you have to keep in mind. That's the loan to value. So, but usually in the rural properties that we do this on, that's not an issue, because all you're doing is locking in the current use of timberland, ag land, recreational land, which is what you bought it as to begin with and what they financed it as. In the beach property example, if you paid $100,000 an acre for it and the easement turns it into $5,000 an acre land, then there may be a big change in your LTV, and the bank's going to call your loan for that adjustment, a payment for that adjustment, or call your loan. So you want to make sure that you're talking with your lender in this process. They understand what's coming and they know how to move accordingly. And then to your comment about the G-Wagon, there are a lot of tax deductible activities associated with owning land that people don't understand. Buying equipment, mileage to and from the property, timber basis can be depleted tax-free, meaning that you got $2,000 an acre in timber value, you can cut $2,000 an acre off tax-free. It is not a capital gain. It is just a capital recovery. So that's one reason why there are so many wealthy people in land. There are just opportunities everywhere for tax deduction over and above an actual easement. So, and with just the equipment side of thing, people use that all the time. It's great, but ever since they got rid of like-kind exchanges on vehicles, anytime they take that, depreciate that G-Wagon, trade it in, they actually have to pay a capital gain now on the trade value where you didn't used to have to. So it can come back to bite you too. So, having some land and some acreage to run these deductions along with can really help you.
And then if people wanted to get in contact with you, what would be the best way for them to find you?
So our website is nationalland.com. My email is cflowers@nationalland.com. And cell phone is 251-387-0787.
Good. Well, I wanted to say thank you for obviously explaining all this to me. This is something that interests me tremendously. In 2017 was my first year where I made a decent amount of money, and I remember getting hit with taxes and almost just feeling like, what just happened? Then I started buying apartment complexes, started doing bonus depreciation on the apartments, and now this is obviously something new. So this has my interest, my undivided interest. For all of our viewers out there, this was Clint Flowers. He works with National Land Realty. He explained to us what a land conservation easement and what are some of the tax benefits of doing land conservation easements, and also good ways of doing it and also bad ways of doing it. Thank you so much for being on the show, Clint, and until next time.
My pleasure.